And welcome to the Aaron Katzman Show. I'm your host, Aaron Katzman. We speak to you about your life, your money, and your investments. And as always, we're coming to you from the spiritual and soon-to-be financial capital of the world, Jerusalem, Israel. Yes, we have financial advice spliced in with spirituality. You don't get that anywhere else. If you got any questions or comments, feel free to email me at Aaron, A-A-R-O-N, at lighthouse with an L, lighthousecapital.co.il. That's Aaron at lighthousecapital.co.il. You can check me out on the web at www.aaronkatzman.com. That's www.aaronkatzman, aaronkatzman.com. Be sure to subscribe to my YouTube channel. We're on Twitter. We're giving Kylie Jenner a run for her money. We are like all over social media. We're not in the billionaire class yet, but we're getting there. We're going to replace her. It's my pleasure to have a guest on the show. Not only is he a good friend, we actually, for disclosure, we actually used to sort of work together, I think. Although I don't know if it was work. We used to like talk for hours and then do karaoke, if I'm not mistaken. But I'd like to introduce
and
Zack
financial
Miller.
poetry.
Yeah, Zack Miller, welcome to the show.
Thank you, Aaron.
Zack is the founder of Tearsheet, which is a modern media firm tracking technology impact on the financial services industry. He's widely read by top digital product and marketing professionals in the financial services and fintech space. He's also the co-founder of OurCrowd, an online investment platform for early stage tech firms. Zack, welcome to the show.
Thank you, Aaron. Best intro ever.
You like that? We could do, we could do a little karaoke Wednesday. That'll make it viral.
Exactly. That'll definitely catapult you into the Kylie Jenner category.
So Zack is, like I said in the intro, he is like the guy, the go-to man, like globally, in fintech. Now, that sounds really impressive, but there are people, even like myself, who don't really know what fintech is. They hear the term all the time, but could you start off just by telling us what is fintech?
For sure, and it's a pleasure to be here on the show, and pleasure to be talking to you again, old friend, colleague, co-player. Anyway, fintech is actually, it's a very hard word to define. It's a simple word. It's actually, it's two words put together, financial technology. It really, I'll give the explicit answer and I'll give sort of the metaphoric answer. So the explicit answer is, it's the modernization of the financial services industry. And so you can see that in two different ways. You can see it from an institutional way, like banks, investment firms are incorporating new technologies to become more adept, more agile in terms of servicing their customers. There's also a form of fintech which addresses like sort of inside companies, the financial function within companies. So a CFO would be a user of that. Maybe it's how they do accounts payroll or accounts receivable, digitizing that, payments, all that kind of stuff. I don't focus so much on that. I really focus on the impact that technology is having on the financial services industry. But more than that, financial technology, fintech, is talking about, it's sort of an ethos. It's about a new way of approaching banking, a new way of approaching payments, a new way of approaching investing that looks a lot more like Facebook than it does sort of your old brokerage firm, where you pick up the phone and phone in an order.
In what respects does it look like Facebook? Like if I have an account at X bank, right? What does that mean now that banking is going to turn into Facebook?
It means that my banks know or should know a lot about me. They should know where I bank. They should know the money held away from them. They should be able to provide me a complete financial picture, even if the money, all my funds don't reside with them. So data aggregation, being able to personalize services to me as a customer, makes it a lot more like Facebook. Facebook has a tremendous amount of demographic and user information about us as individuals. Imagine if that were applied to a financial services firm where they knew exactly, before I even knew, when my mortgage was coming up and I wanted to refinance, or maybe when I had a bond that was maturing and they proactively reached out to me and said, hey, maybe you want to roll that over into something else. It's really about sort of the modernization of that industry.
And are the banks like on board, or are we seeing like a lot of startups who are going to take the business away from the banks?
Yes. So I think when you think of the financial services industry, for a reason, it's risk averse, right? We have our money there. They need to protect it. There's insurance, FDIC or SPIC insurance on on our funds, right? There's a reason why that exists. Banks in general are risk averse. And so what happened over the past 10 years is billions and billions of dollars have flown into startups. We call those fintech startups. And what that has done was sort of, it kind of greenlighted a lot of these internal projects at banks and saying, hey, we don't necessarily see these new startups, these upstarts as competitors yet, because they're tiny compared to a JP Morgan or a Citi. But wow, there's something that's really resonating with customers there. Maybe we need to get some of that in here. And so the banks are modernizing their systems. And the banks actually, all the major banks do have some type of innovation efforts that could be programmed. So some of the biggest banks have internal venture capital funds that they're actually deploying and investing in some of the top startups. Other ones do in-house incubation, where they get smart people and put them together on teams to work on sort of next generation products for them. They also do partnerships as well. And so what we started out as an industry, one thing we've seen where maybe startups were competitive or seen as competitive with banks, what's happened now, particularly during the pandemic, banks which needed to step up to the plate and really process an unprecedented amount of PPP loans, like government aid. They actually sought out a lot of fintechs to help them be able to do what they were planning to do within 2 years, within a month. And so there's a lot of collaboration now between the incumbent industry and the startup industry.
And are the credit card companies getting in this as well? I mean, they have their own niche in terms of the financial sphere, let's say, and they're not necessarily competing with JP Morgan and Citi. But like Visa and MasterCard, where do they sort of fit in this whole new world?
That's an excellent question. Glad you asked that. And by the way, I happen to own a Visa stock, so I'm, just a disclaimer there. I think the credit card companies are positioned probably in the best space of any of the companies to benefit from sort of the changes that are happening in the industry. So if you look at what Visa and MasterCard both have done over the past few years, they through acquisition and through building their own products, they're now playing in every form of money movement that you can imagine. So if I want to do peer-to-peer payments, if I want to do account-to-account payments, if I want to take a merchant swipe, they now are actually touching every part of that transaction. So a lot of these upstart startup banks, like in the US, like a Chime or Vero Money, these are the popular ones in the US. In Europe, you have Revolut and N26, which have also come to American shores. Behind those, at their core, it's basically an app with a debit card. And you don't even need to necessarily have a bank account. It's almost like a virtual bank account. You can move money in and off of the card. And that's all powered by MasterCard and Visa. So MasterCard and Visa both have the ability to pull money off of a card, and through push payments, which has become a very popular platform, to push money out to a card. So whether that means you're sending money to a friend, or you're actually through your job, you're getting paid out to your debit card, or you're taking insurance. Maybe you filed for an insurance claim and your insurer is paying you back. That can happen now directly to my card. I don't have to get a check and deposit into the bank.
Wow.
Well, so in addition to that, both MasterCard and Visa, I'm talking about the two biggest, they also have in-house incubation programs. So they are investing and coordinating startups around the world, basically to help them accelerate up to get into the market, as well as to them to connect to the payment rails that each one of those companies runs. So they're investing heavily in sort of the next generation of financial services.
Okay. And I want to make, we've got to disclose everything, right? Or put in whatever it is, right? But any company that we speak about, which is publicly traded, I'm obviously not recommending anybody go out and buy stock in those companies, and you have to do your own research and come to your own conclusions. We take no responsibility. It's not me. It's not Portfolio Resources Group. None of us are recommending any of the stocks. You are tuned into the Aaron Katzman Show. I'm your host, Aaron Katzman. We speak to you about your life, your money, and your investments. We're speaking about fintech today. And if you got any questions or comments, feel free to email me at Aaron, AARON, at Lighthouse with an L, lighthousecapital.co.il. That's Aaron at lighthousecapital.co.il. You can check me out on the web at www.aaronkatzman.com. That's www.aaronkatzman.com. You can check me out on YouTube, subscribe to the channel, Twitter, everywhere. Zach, how can people get in touch with you? We neglected to mention that.
So I run a media firm. It's called Tearsheet. So that's www.tearsheet with a T, Tearsheet.co. And you can find me on the web. You can Zack at tearsheet.co. You can find me on Twitter and on LinkedIn. It's actually where I spend more of my time on social media.
You forgot the M on the CO. Isn't it supposed to be .com? I'm like Web 2.0. I didn't realize it was like a
We're now in
cut off the
3.0.
letters. Can I just do like a .c?
It won't get to me if you put .co, .com. So it's .co. That's why I mentioned it.
Okay. Can you tell us a little bit what Tearsheet does?
So actually around the time that I started working with you, collaborating with you, I started a newsletter, a podcast, and blogging about what I was seeing as the impact that technology was having on the investment industry. They call that invest tech now. So not fintech, but invest tech. That's sort of a subsector of fintech. And that over the years, it's really burgeoned into a real media company. So we have 4 podcasts now, 9 newsletters. We have a website, tearsheet.co. We do events. We have awards programs. We really have matured into a media firm. So we're read really widely by the heads of product, the heads of marketing, the heads of digital operations at a lot of the incumbent banks. So the Goldman Sachs's, JP Morgan Chase's. We're also read by a lot of the CEOs and founders of these top startups that are making a go of it. As well as all the investors, and like, if you think of venture capital and private equity investors in the financial services industry, they also read Tearsheet as well.
That's really cool. Good for you. Let's look at something like sort of practical, right? So people sort of day-to-day sort of understand a little bit more what it is you're talking about. So I remember back in the day when we were collaborating, right? There was a company called Lending Club, which gave, loans to people, and some of those loans were better than others, and it was all the rage when it came out. Today you have companies, and we were speaking about this a couple of weeks ago, like Square, which is another one of those publicly traded companies, which we're not recommending, right? So we've seen sort of, I'll let you explain how both of those companies work, like Lending Club to Square, but it's almost like a new generation of lending and blowing that out to a much bigger company and touching on lots of different services they provide with people. Can you speak about that a little bit, those two companies, just to give sort of an example to the viewers of what it is and practicality that we're talking about?
Sure. So I guess we'll start with Lending Club. That was one of the first really, I would say, one of the first publicly traded fintech companies to make it to market. Now, fintech is a misnomer, right? The financial services industry has always consumed technology, and it's been one of the industries that's been powered by technology. If you think about trading, or you think about execution or risk management, like the financial services industry always had technology. So when we talk about fintech, we're talking about sort of this next generation of technology, which is facing the consumer, not necessarily in the back office. So Lending Club really was that first generation fintech company, standalone company. They started with peer-to-peer loans. The idea was that, if Aaron, we'll use somebody else, if Karen wanted to refinance her credit card debt, she could create a profile on Lending Club, say, I need $15,000. I'm willing to pay X% on that. And the idea was in the early days that her peers would come in and basically take a piece of that loan. It would be fractional pieces of that loan, and she would get her $15,000, and over 1 to 3 years, whatever the term was, she would pay them back. And that grew to be a $1 billion industry. Over time, it matured and it became what they called marketplace lending. So it wasn't just individuals like you and me, but it was entire investment pools were put together, professional investment pools, to actually allocate funds to this, because you got it was a higher risk. It was a higher risk borrower, and so they got better rates. And the idea was entire funds and hedge funds, private equity funds, they raised money to deploy there. They went public at sort of a peak, and then the industry kind of has been going through sort of its own, trying to find its own feet. Part of the challenge with a standalone company like a Lending Club is they didn't have sources of their own funds, right? So like the beauty of banking is banking has deposits, and so the deposits are they call them almost like permanent funding. So you have deposits, which are typically sticky, and the way a bank makes money is by lending that out and making money on the spread between what they pay and what they have to pay out. So Lending Club didn't have that. And actually, just a few months ago, Lending Club made a purchase, I don't think it's closed yet, of buying Radius Bank. So this was actually a big move of it's actually one of the first examples of a fintech company buying a bank. Happened to be sort of a next generation bank, but it had a banking license, everything like that, because everybody needs, at the end of the day, a source of funds, right? To be able to control your own destiny in life, you need to be able to control sort of your scenario. That's Lending Club. And then if you think of Square, now Square is interesting. Square was founded by, almost as a side project of the CEO, Jack Dorsey, of Twitter. He's actually CEO of 2 public companies at the same time, which I don't know how that's allowed or legal, but he does that. Must be an incredible time manager. Square is really interesting. So, if you've been to a small shop, and you went up to pay for something and you wanted to swipe a card and you saw maybe a tablet there with a credit card swipe, likely that was powered by Square. The idea was, instead of getting a merchant account and getting those old, those hardware, remember in the old days, they had the carbon copy stuff?
Right.
So even the modern version of that is kind of like a big, clunky, handheld device where you swiped it. It could take months for a merchant to be able to get an account. They need a bank to underwrite and stuff like that. So what Square did was say, you know what? We can get you a device within 2 or 3 days. And you don't need to be able to manage this clunky piece of hardware. It actually looks like something like this. But instead, we'll give you a little thing that you can plug into your iPad or into your phone and just take a swipe. It's beautiful. I don't know how many merchants, but it grew like wildfire. So every small merchant could be able to take credit cards, because all the trends show that people want to pay more and more with either with credit or debit, depends where you are. Then Square said, well, you know what? Now that we have merchants using, there's billions of dollars going through it. Maybe we'll get into lending business, right? So a merchant that's using it, they can see, how much funds they typically get in a month. They can actually lend against that. In the same way, Amazon does actually this for small businesses as well. And then they started getting to the front end of it, saying, well, if people are paying, maybe consumers want to get in on this. Maybe consumers can get an app, almost like a Venmo app, which is very popular. It's called Cash. Square has a Cash app where basically it keeps all the money in the ecosystem. So if I want to pay a merchant and I have a Cash account, I can pay directly from my phone. I don't even need to swipe a credit card. And there's all kinds of incentives to use the Cash account. There's money off. There's rebates and things like that. Cash, the app, also allows you to buy cryptocurrency, and I would caution our listeners against,
we take
investing in something that risky. But directly from your phone in like 2 clicks. You don't need to understand all the other stuff. You actually have an account. It's very easy. It's one of the easiest, but it's actually a very good business for Cash, because they make a commission on it. I think they made $100 million last year, I believe, something like that, in profit off of that. So Cash, so if you think of both of these companies, neither has a banking license. Both handle billions of dollars. Both have become very influential in the financial services industry, and yet aren't banks. And so it just, to me, has shown the power of and the ability for a new brand and new technology players. These are technology people. They're not financial people. None of them came out of the financial industry, which is really interesting. Who are making a go at competing against some of the biggest players out there.
That's amazing. Boy, the world has changed. I still long for the days where I had my little passbook, and every time I deposited money in the bank, they would stamp it, and I made like $4, and I was so happy. And now it's gone.
Remember we had interest rates of 8 to 12%?
Anyway, wow, that's fascinating. I'll tell you, This is fascinating. I think we should get you back on, because this is really an interesting topic. And I think a lot of people, like the insiders, know about it, but people just like regular people, they sort of see it happening, but they don't understand all the different all the different elements and all the different features that they can actually tap into to really make their lives, I don't know, I guess easier, right? I guess it's supposed to make your life easier. I guess that's the goal, but as an alternative.
I think that is the goal. I think if you wake up now and you look, especially with COVID, bank branches were shut down. How do you bank? How do you get a loan? How does your business, deal with your finances at this point? So I think what's happened is consumers and businesses can both, in America or beyond, wherever our listeners are, there's so many more choices you have now. Like, so basically what's happening is banking is becoming more and more niche to my needs, right? So maybe I'm in the construction industry, and there's all kinds of needs about cash flow in construction industry. There's like banks now that are digital banks that are focusing entirely on my needs, and the products and the services they're offering they understand my workflows and my cash flows, and they can provide services towards that. If I'm a freelancer and I work in the gig economy, there's options now of ways I can bank that help make my life easier. How do I issue invoices? What if my cash flow gets tight and I need to tap my cash 2 or 3 days before I get paid? They have all kinds of things out there now. And so I think that the winner at the end of the day, I can't speak to any of the companies. I don't know which of these companies will be winners, but I think at the end of the day, consumers are win because they have more options.
Cool. Fascinating. Definitely fascinating. Zach, once again, how can people get a hold of you?
Tearsheet.co.
That's Tearsheet.co for all of you people like me. CO, no need for the
Commanding officer. Commanding officer.
Thanks so much for joining us, Zach. It was really, really fascinating.
Thanks for having me, Aaron.
My pleasure. You've been viewing the Aaron Katzman Show. I'm your host, Aaron Katzman. We speak to you about your life, your money, and your investments. And as always, if you got any questions or comments, feel free to email me at Aaron@lighthouse with an L, lighthousecapital.co.il. That's Aaron@lighthousecapital.co.il. You can check me out on the web at www.aaronkatzman.com. That's www.aaronkatzman.com. Be sure to subscribe to my YouTube channel. We're on Twitter. We're all over social media. Zach, thanks a lot. And we'll speak to you all really, really soon.